A przed Państwem prezes zarządu Banku Pekao SA, pan Michał Krupiński, który jest gospodarzem tej sesji. Zapraszam.
Dzień dobry Państwu. Bardzo dziękuję w imieniu Banku Pekao SA za tą możliwość bycia współorganizatorem kongresu, bo to zostało powiedziane. Byliśmy z kongresem od samego początku i to dla nas duży zaszczyt i honor. To, co zostało powiedziane wcześniej przez pana premiera Bieleckiego, zostało powiedziane w poprzednim filmie, to jest ta inkluzywna aktywność wszystkich uczestników. Myślę, że nie ma drugiej takiej konferencji, gdzie tak dużą wagę przywiązuje się do tego, aby wszyscy byli aktywnie zaangażowani. O to też jako współorganizator chciałbym prosić na kilkudziesięciu panelach, ale także, jak wiemy, owocem kongresu są odpowiednie rekomendacje i wiem o tym, że profesor Leszek Pawłowicz w roku następnym, przy następnych kongresach ocenia stopień realizacji tych rekomendacji. Więc z tego powodu jest to dla nas też bardzo szczególna możliwość bycia dzisiaj tutaj z Państwem. Maybe I will quickly switch to English. Just to give you an example of how demanding the hosts are, I was giving today a task of introducing someone who doesn't need an introduction. So it's quite a challenge. Nouriel Roubini is one of the most well-known, respected economists. He was named one of the top global thinkers. And he's widely credited as the person who has foreseen the last financial crisis. After that, he comes as Dr. Doom, which I know from talking to him he doesn't like as a nickname. Apart from being able to foresee the last meltdown, including the housing crisis in America, he was right on many other topics. I remember back in 2017 in Davos, Nouriel Roubini was saying that Bitcoin is the mother of all scams, and we will all end up in tears. And that was a time where Bitcoin was trading at $20,000, and everyone was expecting the price to go to 100,000. He was right much before the crisis on potential issues related to the Eurozone and tensions between particularly some of the countries in the periphery of the Eurozone. So I could have ended here, but let me say why I think Professor Roubini has achieved such a great success. I think it has to do with the fact that he's not an American economist, although he came to us here from New York, where he teaches international macroeconomics on a daily and weekly basis at New York University Stern School of Business. But I think it has to do with the fact that he's an international economist. He was born in Turkey, lived, brought up, and educated in Milan, has a first degree from Milan, and what is also very relevant, considers himself, and I quote, a global nomad. Professor Roubini spends half of his time traveling, visiting conferences like ours, meeting senior policymakers, heads of state and government, finance ministers, and central bank governors in trying to understand today's complicated world. And I think in today's very complicated, very interdependent world, the world that is fast, with this fast technological change, this is the only way to get the prescription right. The time of our lecture, I think, is also very timely, not because of the fact that President Trump is in Europe, is in London today. We know that Nouriel is maybe not a big fan of some of Trump's policies. I'm sure he will talk about it as well. I think it is a very timely meeting because of geopolitics. Even though we are not facing a fully blown economic recession, some people are saying we are in the middle of a geopolitical recession where multilateralism is in backlash, where the world has turned from G20 to G0, which means it is increasingly more difficult to understand today's world. I think it is also very timely because of the fact that we are 1 week after European elections, and I know we will have subsequent discussions on Brexit, and Professor Roubini will also offer his views in this regard. Let me just wrap up by making 2 additional comments. Whenever I go to, as the CEO of the bank, meeting clients, Polish corporates, as you know, we are one of the largest corporate banks, I see an increasing awareness of Polish corporates, Polish business people, and all other customers in increasing interest in what is going on in global affairs. Poland has successfully, because of the events that were shown 30 years ago, reached a stage where we have an increasing number of companies that are global in the way they think, exporting to 100 countries in the world, where an advice on what is going on in the global economy and global politics becomes very relevant. Nouriel Roubini has been with our bank as partner and advisor for some time. It is not his first visit. We were happy to have hosted him with our clients last year in Warsaw. And actually, some of them called me a couple of months ago and said, you were right. So they took this advice very well, and has also been present with us alongside President Andrzej Duda in Davos, where we took a larger delegation of Polish corporates in trying to present Polish success story to international investors community. So thank you very much. Let me please welcome and introduce Nouriel Roubini, who again doesn't need an introduction.
Ladies and gentlemen, distinguished guests, honorable former and current policymakers and politicians, it's a great pleasure and honor to be back here in Sopot. I've been coming to Poland many times, an amazing country, fascinating. I remember the first time I came actually to Poland was in 1980. It was even before the Solidarność movement started, or was around that time it started. It was a completely different country, and I've followed the evolution and amazing economic and social success and return of democracy of this country. So it's wonderful to be back here. Thank Michael for the very kind words and introduction. It's a great pleasure to collaborate on many dimensions with Bank Pekao, so I'll be coming regularly to this great country. Now, I had a chance to arrive here on Saturday and then go and visit this beautiful city of Gdańsk while staying in Sopot. And as you all know, it's an amazing historic city. Unfortunately, it was also the city where World War II started, when the Nazis took as an excuse to attack first Gdańsk and then occupy Poland. But as the video I just showed, there was another key important date. That is tomorrow's anniversary, June 4th, 1989, 30 years ago. And this was the day when the first democratic elections since the 1920s occurred in Poland. And that was the beginning of the collapse of the Iron Curtain and the collapse of the Soviet Empire and Soviet Union, and starting with Poland, the beginning of a return to democracy and to market-oriented economies and reform. So it's really an historical time that we are celebrating, completely change Central and Eastern Europe. You also know that actually June 4th, 1989 was another historical day in China. Was when there was the crackdown by the government against the students who also wanted democracy in Tiananmen Square. And since then, actually, Central and Eastern Europe and China have taken opposite political directions. Central Eastern Europe became democratic and a market economy, while China has gone in a more authoritarian direction. However, the interesting thing is that also 1989 was the beginning of 2 decades of completely radical change of the global economy, where openness and globalization continued, not only in the Western economies and advanced economies, but also in former centrally controlled economies, not just in Central and Eastern Europe and the Soviet Empire, but in spite of what happened in Tiananmen Square, even China continued its own process of economic development. So this was a period of globalization, of opening to trade, to investment, of privatization, of market-oriented economic reform, of inward and outward foreign direct investments. And this was something that occurred not only in this part of the world, but China also continued it. And in 2000, China also became a member of the WTO that brought it even more so into an integration with the global economy. Now, interesting thing is that this period of globalization, some people call it hyper-globalization, lasted about 20 years, between 1989 and 2009. And since then, things have become slightly different because, of course, 2008 and 2009 was the years of the global financial crisis, where some of the major economies in the world of the private market economy, like the United States, had an economic and a financial meltdown. Since then, in the last decade, we've seen, to different degrees around the world, what I would refer as a populist backlash against globalization, against trade, against migration, even against some technological innovation that is seeming to be capital-intensive, skill-bias, and labor-saving, even against supranational authority. People want to maintain their own national sovereignty on many things. And there's been also something of an attack in some parts of the world against democracy and liberal democracy. In the East, like China, they say the US political system is dysfunctional, division between the two sides. Our authoritarian system is better than your dysfunctional democracy. We've seen this backlash in the election of Donald Trump in the United States, in the vote for Brexit in the UK, in the fact that now you have Lega and Cinque Stelle in power in Italy, you have an authoritarian like Putin in Russia, or another one like Erdogan in Turkey. And China, under Xi Jinping, has become more authoritarian, even that process of degree of political freedom that occurred under the previous president and premier has gone in the opposite direction. Now, this rise of populism is complex, and some of it actually may have positive elements, because we live in a world in which, because of globalizations, there are some winners and there are some losers. There are some who are achieving and succeeding, but there are also some left behind. And unless we make sure that this globalized and digital economy is good for all, not just for the top 1 or top 10%, of course, this backlash against market-oriented reforms or even against liberal democracy is going to become more virulent. And therefore, we have to think about the economic policies that bring success to everybody. And that's the way to save democracy. And of course, if some of these populist policies become extremely radical, extremely anti-market, and we have extreme cases like, for example, Venezuela today, we know what happens when you go in a populist way. You have economic chaos, economic collapse, hyperinflation, default, and economic disaster. So extreme populism, while it's popular in the short run, often leads to economic and political and social kind of disaster. The other big picture thing to keep in mind is that in the last decade, we've seen a radical shift in the global geopolitical power. The US is still maybe the largest economy in the world and maybe militarily still the strongest, but the US is in some degree of relative decline, even if its absolute power is still very large. The key issue of our time is the rise of China. That's going to become the largest economy in the world. And of course, the political debate is whether this rise of China is going to be peaceful or aggressive. There is a rise of other powers. Today, a country like India is growing faster than China, and it could grow faster for the next 10, 20 years, or 30, becoming another major economic and geopolitical power. There are also powers that are in relative economic decline, but they're becoming more aggressive and potentially dangerous. Russia is in that economic decline, demographic decline, but is becoming a revisionist power that could be threatening parts of Europe, and that's something to keep in mind. That leads me also to the consideration, I'm going to elaborate in my talk, about the role of Europe, European Union, and the Eurozone. This Europe is in a flux state. There is a debate on whether more integration should occur or whether it should be less integration. And some people worry about disintegration of Europe, with, for example, Brexit being the beginning of it. There is now something of a backlash in parts of Europe against austerity and economic reforms. I've seen in the country where I grew up, in Italy, where now populist parties say enough of austerity and reform. There are some debates on whether there should be more integration or try to have more national sovereignty on some of these things. And there is a spectrum of views of what should be happening. But there is a broader and key issue on what the role of Europe should be in this global economy. And I would point out in my remarks that in a world in which you have existing powers like the US, rising powers like India and China, and even declining power like Russia that are, however, potentially aggressive, Europeans, with all their differences, have to stick together and have a vision about economic policy, trade, regulation, foreign policy, migration, provision of public goods, and making feel the citizens of Europe that Europe is for them, because either Europe is united, and as united can have leverage on global economic, trading, financial, political, security, military affairs, or if it's going to be divided, disintegrated, then it's not going to go in the right direction. There are too many interests that want Europe to fail. This US administration is somehow skeptical about Europe, sometimes even skeptical about NATO. Certainly, Russia would like Europe to disintegrate. And even China is trying to divide Europe, going with the BRI in Italy or offering carrots to countries in Central and Eastern Europe. So there are great powers that don't want Europe to succeed. And if Europe were to fail, the economic and social damage is going to be significant. Of course, we have to find the right ways for Europe to succeed. Now, if I think about the global economic outlook on the short term and then implication over time, I will make the following observations. Yes, since 2009, we've had a global economic recovery. Initially, it was mediocre, then it's picked up. The good news is that there is not yet a US and a global recession, and under the right policies, we're going to remain in this period of okay economic growth. Okay, because even the IMF considers it as being the new mediocre. Here in Poland, you're growing between 4–5%, but as you know, the potential growth of the Eurozone is closer to 1%. And other advanced economies like Japan have also low potential growth. Now, economically, the global economy for the last few years has been going through periods of what economists call economic expansion, where growth is positive and accelerating, and periods of economic slowdown, where the growth is positive but is decelerating. And those two periods have been associated also with periods of time where risk is on or risk is off. Risk is on means that US and global equity and risky assets go higher when there is global expansion, while risk off episodes are periods of time where there is worry about the global growth, slow down, and then US and global markets tend to fall. There were two risk off episodes in the summer of 2015 and early 2016. Worries about, among other things, a hard landing of China that led to a 10% correction of US and global markets. After that episode, the global economy from the middle of 16 until sometime in 2018, last year, was in a global expansion where growth accelerated. And US and global equity rapidly went higher during that year and a half. But if you think about the last year in the fourth quarter of 2018, there was a severe risk-off episode when market correctly sharply down. What triggered that risk-off episode in the fourth quarter of last year? Many factors, but I would say three were the most important. Number one, there was worry about the possibility of a trade war between US and China. Two, there was evidence that China was slowing down, Eurozone was slowing down, and even US was slowing down. And three, the US Central Bank, the Fed, in December, in spite of all this volatility in the market, they said, we'll keep on rising interest rates for the next 2 years, 3, 4 more times, and we're going to keep on reducing our balance sheet, what is called quantitative tightening. That was a form of monetary tightening, and the market panicked even more. Then suddenly, in January of this year, the market from very pessimistic became very optimistic. We went from risk off to risk on for 4 months. And there was a massive rally in US and global equity. What led to that recovery of optimism about market and about the economy? I would say several factors. Factor number one, the Fed in January said, I was kidding, I was joking when I said I'm going to raise rates. I'm not going to raise rates, and I'm going to stop by middle of the year running down the balance sheet. And as the Fed said so, ECB, BOJ, PBOC, and all central banks became more dovish. Good news for the market, for the economy. Two, in spite of the worries about hard landing and stall of global growth, numbers out of China came better, in part because they did a monetary, fiscal, and credit stimulus. Numbers of the Eurozone in the first quarter better than expected, and even US growth was 3.2% in the first quarter. So suddenly people said, well, we panic. The world is not collapsing. Things are better. That was the second factor. And the third factor was that as the US and China were talking, every week people say, we're getting closer to a deal. We're 70% done, 80% done, 90% done by the end of April. Then suddenly, early May arrives, and in early May there is a whole bunch of shocks that have led now the markets to be into a risk-off and a correction, and the latest economic data that they were suggesting the beginning of a new expansion in the first quarter suggested now we might be switching to risk-off and the beginning of another economic slowdown as opposed to an expansion. So what are the bad news? Bad news number one is that, unfortunately, this negotiation between US and China have led to a clash. And the worry today is not only about the trade war, but is also about a broader technological war and a cold war between US and China. So the relation is becoming very dangerous on many dimensions, including political and geopolitical. About 3 years ago, before Trump was elected, I was part of a delegation, went to Beijing, and we had an audience with President Xi Jinping in the Great Hall of the People, just off Tiananmen Square. He started his remarks without being prompted, speaking for 10 minutes about what? He spoke about the Thucydides trap. Now, for those of you who don't know it, Thucydides was the great historian, Greek historian, who wrote the story of the rise of Athens, new rising power, facing an existing power, Sparta. Sparta feels threatened by the rise of a new power, and war does occur. And therefore, the Thucydides trap is a term is used right now to refer to the episodes where you have a clash between rising power, new power, and existing powers. And Professor Allison from Harvard, 2 years ago, wrote a book titled Destined to War, Will US and China Avoid the Thucydides Trap, ? Where he showed that in the last 2,000 years, in 12 out of 16 episodes, where there was a rising power facing existing power, war did occur. Now, I'm not expecting war, hot war between US and China anytime soon, but I do fear, and that's a risk that's becoming more prevalent, that not just a trade war, but a technological, an FDI war, and a cold war, the geopolitical, may be brewing between US and China. Is about who's going to be controlling AI, who's going to be controlling the industries of the future, who's going to be controlling 5G, Huawei or somebody else. There'll be restriction to trade in goods, in services, in capital, in foreign direct investment, even in people and labor, data, technology, information, and so on. So we could end up potentially in a world that is deglobalized and is balkanized. And unfortunately, in that world, if it were to occur, both the US and China are going to tell the rest of the world, Either you are with me or you are against me. Either use my AI and 5G or use the Chinese, and you cannot use both. But we also live in a world in which most countries in the middle, whether it's Europe, Middle East, Latin America, and so on, or other allies of the US in Asia, many of the US allies around the world today do more trade and investment with China, even if they are politically still allies of the United States. So economically, they want to get closer to China, but geopolitically closer to the US. And if the two sides will say, with me or without me, the damage is not going to be just to the US and China, but will be to everybody else. And that's a risk that we have to keep in mind. We do not know yet whether Xi and Trump are going to reach a deal. I worry that of all the geopolitical things of our time, you can worry about Russia, you can worry about the Middle East, but the defining geopolitical our times for the next 10, 20, 30 years is going to be this rivalry between the US and China. The two-cities trap is occurring, this Cold War is occurring. The only question is, can we manage it? Can we diminish the extent of it and the extent of the potential damage and balkanization of the global economy? So that's one risk. Second thing has happened last week or so, that not happy of having a fight just with China, now Trump is having even a fight with Mexico. And the risk of tariff is another risk to the economic success of US and the beginning of a broader trade war. So as you know, he was elected on Buy American, Hire American, Make America Great Again, America First, restriction to trade of tariffs on aluminum and steel, and then renegotiating NAFTA, and then China, and this Mexico thing, and then threatening tariff against Europe, potentially on autos, threatening to get out of WTO. Unfortunately, this US administration is quite protectionist in many dimensions. There is another geopolitical risk I want to touching that may or may not materialize. US and Iran are on a collision course in the Middle East. One should think rationally that neither side wants a war. If it was a war, US is going to lose because oil prices will spike, there'll be a recession, so Trump should not want a war. And the Iranians may want to wait out Trump to see maybe if a Democrat is elected November of next year. But as we know, accident occurs because the world of wars between the two sides is escalating, and other groups can provoke and do attacks of one sort or another to instigate a war. And 3 times before, a geopolitical shock in the Middle East has led to a global recession and high inflation. You had the Yom Kippur War between Israel and Arab states, 73, oil embargo, tripling of oil prices, the Iranian Revolution, 1979, another embargo, and even the 1990 US and global recession was in partly driven by the Iraqi invasion of Kuwait that led to another spike in oil prices. If you think about it, both a trade war and an oil shock are a negative supply shock that reduces growth and increases inflation, price of oil and energy, and price of imported goods. So it leads to a dilemma for central banks. Should I ease because there is lower growth, or should I raise rates because inflation is getting out of control? Now, in my view, the important point to keep in mind is that these shocks that are negative supply shock initially, they become over time also negative aggregate demand shock that slow down growth and slow down inflation. Why do I say that? If oil prices rise and import prices rise, real income of households slows down, that reduces consumption. 2, if there is all the political and policy uncertainties of trade wars, oil wars, and also what's happening with the uncertainty politically in Europe and the Eurozone, if you're a business, there is an option value of waiting. Before you make a major capital spending decision like more investment, more capex, let's wait and see 3 months whether the world becomes better or worse. So you have like an investment strike, but if everybody becomes more cautious in Europe, in China, in Asia, in US about spending more in the business sector, it could become a self-fulfilling recession or stall of growth because of this option value of waiting. 3, when you have a tightening of financial condition with the stock market down, credit spreads wider, and safe haven currency like the dollar becoming stronger, that also tightening of financial condition slow down private spending, because you have wealth effects and cost of capital effects, and a stronger dollar make the US trade deficit even bigger. So while in the short run, this is a negative supply shock, over time becomes a negative demand shock, and therefore the only silver lining to these bad factors is that if this shock were to materialize, the reaction of the US Federal Reserve, but also ECB and other central bank, is not going to be to raise rates because there is more inflation, it will be to cut rates because the impact on growth is more severe. And also we live in a world in which inflation is below target. So if it goes slightly towards 2, not such a big deal. The risk is not large that you have a de-anchoring of inflation expectation to the upside, like in the 70s. Inflation expectations are quite anchored. So I think the reaction will be to ease. That will help financial condition, will help the economy, but after the shocks have caused a significant amount of economic damage. So that's maybe the positive. Let me speak about Europe, the Eurozone, after these EU elections. The first quarter of this year was okay for the Eurozone and European economy, and some parts of Central Europe, like Poland, are amazing success, but I would say it's an exception to be a country growing 4 or 5%, because the rest of the Eurozone is barely at 1. But if I look ahead, given all these uncertainties, I would say that there are headwinds to growth, and probably in the Eurozone, growth in the second half of the year is going to slow down rather than improve. People had hoped that it would improve after this risk-off episode when there was a recovery of the market. Why do I say that? A trade war between US and China, one of the biggest victims is a much more trading nation, that is Europe. And all shock will be bad for Europe, as it depends on oil more than the US and doesn't have shale gas and oil and taxes oil and energy more. You have uncertainty about what's going to happen to Italy, what's going to happen with the results of the parliamentary election and who's going to be running Europe. There is a rise of populism. There is political fragility in France, in Germany, where the gross coalition may collapse. There is still uncertainty about Brexit. Will Brexit be soft or hard? And there'll be a discussion. Look forward to it this afternoon. Given this uncertainty and given that also the policy tools are constrained, you know, the ECB is still already a negative policy rate. They've stopped doing QE. How much more they can do? They can do a little bit more, but not much. There is some room for fiscal stimulus, but again, which are the countries that have fiscal space in Europe? Germany, Netherlands, Poland, but Italy doesn't have much fiscal space. Greece doesn't have fiscal space. France doesn't have fiscal space. So if shocks occur and the economy slows down, both monetary and fiscal policy are only limited in the ability to counter those shocks. And as I pointed out, there are all these political uncertainties in Italy, in France, in Germany, with the results of the election and so on. And in June, the ECB is going to make only cosmetic changes. They're going to say, yes, we're going to have friendly, generous conditions for these TLTROs. Yes, we're going to change our forward guidance by saying we're not going to hike until March of 2020, when the markets do not even expect the Fed to normalize rates until 2021, and they're not going to do a tiering of reserves. That's too controversial. So even in June, the ECB could surprise on the downside. And there's a broader uncertainty about who's going to be running the major institutions of Europe, who's going to be running the Commission, the Council, the ECB, and there are, of course, 2 other very important positions. One is the head of the parliament, and who's going to be the High Commissioner, the Foreign Minister of Europe. Now, the debate is ongoing, and there are a spectrum of views of one sort or another. I spent the last part of the week, last week, all week, between Paris, Frankfurt, and London, and I will make the following observation, not about my preference, but what is likely. It's clear, at least in Paris, that the view of Paris is that this time around, controlling Brussels, meaning the Commission, is more important than controlling Frankfurt, meaning the ECB. Ideally, the French would like to have a French at the Commission, a French at the ECB. That's not possible. If you choose one, you cannot choose the other. And why they think that it's more important to control the Commission, because they believe, and I think that's correct, is that in the next few years, with the rise of China and US and all these trade and technological rivalry, Europe will have to figure out what's your trade policy towards US, China, and the world. What's your regulation policy? What's your competition policy? You know, China is national champion. US has GAFA. Some people say blocking the Alstom-Siemens merger was a bad idea because we need national champions in Germany, in France, in Poland, in other parts of Europe. So we have to have a different competition policy in this world of big players fighting each other. You'll have to figure out what you do on immigration, on provision of a variety of public goods in Europe. So have a sense of what Europe is going to be. And that's why the French say whether it's going to be Barnier as opposed to Timmermans, as opposed to Vestager, we want either a French or somebody supported by liberals, Greens, and Social Democrats. Of course, the EPP says no. We have the Spitzenkandidat. The EPP was the first party. We like Weber. But even within the EPP, people tell me Weber is considered as a potentially kind of a lightweight. He might not be the right person, given experience, to run the commission. And there'll be this debate. So one scenario is one in which you get Weber to run the commission, but then you'll have a French running the ECB. There's another scenario in which whether Barnier, Vestager, or Timmermans runs the commission, and then you might have Jens Weidmann, a German, running the ECB, unless Angela Merkel decides that she wants to be still involved in politics rather than retire. And to me, that will be ideal because she's the true European lady. She might want to run the council. So if you had somebody else running the commission, then Merkel at the council, and then you have a French run the ECB, you have three pro-European individuals that are going to think about the future of Europe. Now, my point is that regardless of what your views are, and some people might want a center-right, centrist, or center-left candidate, this time around, it's important to have strong leaders that are running the key European institution. This idea that the French and the German in the past lead from behind and they put somebody from a smaller country who doesn't have as much political power or gravitas to run the commission as opposed to the council, as opposed to the parliament, is not going to work. You may believe that strong leader is from here as opposed to there, but whoever he or she is going to be has to be a strong leader. Because if you don't have a strong leader with a strong vision about what Europe should be, and we can also debate how much integration as opposed to national subsidiarity, but Europe has to deal with rising China and rising US and aggressive Russia. And unless you have the right policy on trade, competition, regulation, immigration, foreign policy, defense, the spectrum of all these things, Europe is going to be a geopolitical midget, and its power is going to go sideways as opposed to even gradually falling and disintegrating. So it's not time anymore for minor figures. You need stronger leaders that together with all of Europe have a vision of what Europe should be. Because in this world of big giants and superpower, it's divided or impera. Either you are together and you have that vision and you can succeed in Europe, and Europe has an amazing history and energy and skills and education and infrastructure and human capital and people and technology. Much more needs to be done, but you have to have a common European vision about it. Otherwise, you're going to be swallowed by the rest of the world. So to me, it's important to have that type of vision. And I conclude making the following remarks. In a baseline, the world economy is going to continue to grow, but the global economic outlook is becoming more cloudy. US and China, US and Mexico, US and Iran. 6 months from now, the US might say, hey, I'm going to impose this auto tariff on European exports of auto unless you give me quotas or voluntary export restriction. There are these political uncertainties in Europe that are affecting business sentiment and so on. Now, in a luck scenario, we have leaders are going to reach agreements on US, China, on Mexico, on auto. We're going to avoid the war with Iran. the mood is going to improve for the business mood, for the investors' mood, for the consumer, and the growth is going to improve. Asset prices are going to be rising, and this expansion is going to continue. That's the positive scenario. But there is a risk that actually some of these risks are going to be materializing, the negative ones, in which case growth is going to slow down, the correction is going to become bigger, and there'll be risk also to global economic growth short of a recession. So this is a time of extreme uncertainty, but also of extreme need for leadership. Leadership by politicians, leadership by governments, also leadership by people in the private sector all over Europe and the world to push for the right solution to the right problem. In this global economy, we are interconnected. The idea that US and China can separate easily doesn't make any sense. You know, when there was the first Cold War, Russia was a declining economic power, declining population, and there was almost no trade between US and Soviet Union. So who cares there were sanctions? Today, instead, China is going to become the largest economy in the world, is a rising power, 1.4 billion people, and we are a full integration of everything. Think about balkanization, where supply chain, trading goods, in service, in capital, in labor, in technology, in data, has to all break up, and we separate each other. Think about the chaos that will occur. You know, there are 1,200 separate suppliers of Huawei just in the United States. Separating and disintegrating this process of the globalization is going to lead certainly to a recession, to economic and financial damage. And that's my final point here. US and China are on a collision course, but I believe that Europe can play an important role. In a world in which US says, the traditional WTO economic order, I don't like it, and Chinese wants to have trade unfair their own way, Europe can be a bridge, can be a liaison, can be the trade union between US and China and say, if we disintegrate, we are all dead, but we as Europeans, we can contribute with you to a new set of global economic, trading, financial rules that make sure that while there are frictions, while we compete, we also cooperate, and we don't destroy the global economic order that we created after World War II. So Europe can actually get the leadership to make sure that US and China are not on a collision course of a Cold War, let alone of a hot war. And actually that will be better for everybody, and that's the key role that Europe can and should play. But to play it, you need to have strong leaders who believe in Europe, and together, put together all the countries and decide together what's the vision that Europe has for itself, for the region, for the world, to maintain peace and prosperity. I do hope and optimistic that's going to happen, because it's going to be important for the world. Thank you very much.
Thank you so much, Professor Roubini. If you'd like to join Chairman Krupiński now for a short discussion, proszę Państwa, ja tylko bardzo jeszcze raz poproszę o ten slajd z adresem, pod którym należy zadawać pytania panu profesorowi Roubiniemu. Mamy jakieś 20 minut na te pytania, jeśli chcemy być na czasie. O, już się one pojawiają, proszę Państwa, slido.com. EKF1, EKF1 z hashtagiem czekamy na pytania. Pan prezes Krupiński jest moderatorem.
Okay, thank you very much. I think a truly fascinating journey through the global economy. And it's good to see that you ended up on a positive note and provided some of important solutions. Also emphasizing how important it is to lead in those turbulent times, but also to be able to manage change. Because when I think about leaders in today's world, managers, CEOs, people running businesses, big organizations, I think all what we do is actually managing change. I think there will be a number of questions showing up on the screen, but before we see them, let me start by asking on China-US, not the war, although the World Cold War, which has a special meaning here, was mentioned to you a couple of times. Do you see any positives in this arms race in terms of technology, and also how this gets reflected in global growth. To what extent can this rivalry save the world's growth going forward? And also, do you see any other positives, or do we, how should we rather look at this from a negative side?
Well, in my view, a positive will be a situation in which, say, hopefully President Xi Jinping and President Trump meet in the Osaka G20 summit. They're not going to reach an agreement, but if they say, we agree that we should continue negotiating, and we're sending our two-side Liu Wei, Mnuchin, Latziger to see each other every week until we reach a deal, that will be a positive. However, and if there is eventually a deal on trade and maybe on also reducing some of the short-term tension on technology and things of that sort, unfortunately, the war of words between the two sides is sort of escalating. Both sides says the other is weaker and have more leverage. The Chinese already saying, President Xi Jinping, we should get ready for a new long march, meaning you'll have to suffer, my fellow Chinese, even if growth is lower. But we fought the imperialists 100 years ago. We have to fight them again. And unfortunately, also what started as a debate about trade, how much soybean, LNG, and Boeings to buy or not to buy, and how much reduction in tariff and non-tariff barriers. Now is a war about AI, about 5G, about who's going to control the industries of the future and so on. So the stuff they're putting on the table is more. Now, both sides rationally should get a deal because China still depends hugely on export to the US. And if there was a 25% tariff, not just on the first 250, but also on the remaining 300 billion of Chinese exports, China could have a sharp slowdown economically and hurts. And the legitimacy of the regime has always been based on delivering the economic goods. And two, if there is a trade shock that leads then to a stock market shock, Trump may not get reelected. So some people already say, between a bad deal that leads to the recovery to the stock market and leads to re-election, and instead no deal on principle that leads Trump to lose the election, he cares more about getting re-elected. So even if it means to compromise with China to get a bad deal where he doesn't get everything he wants, eventually he's going to blink. So the logic is both sides will be better off blinking, because this is not a zero-sum game. I win, you lose, but it's a positive-sum game if everybody agrees, and if you don't agree, it's a negative-sum game with everybody. US, China, and the world is worse off. But that's the economic rationality, and we know in these games then posturing, and in this game of chicken sometimes a clash does occur, and then you end up in a bad point. And right now the war of words is going in the wrong direction. So I would say I will be positive about the world if they reach a deal, however patched. I'll be more worried if they don't reach a deal. The honest answer is, I don't know, and nobody knows. I'm not sure even that President Xi Jinping and President Trump in their own brain have made their mind on whether they want to play tough and play the long game, or whether they want to compromise because in the short run it's to their benefit. It's not clear.
Sure. Thank you. I think in your speech, and I'm looking at the questions, and thank you for questions, you have sort of alluded to the world where many countries will be asked a question of who they're going to back, whether it's US and China. And of course, this part of Europe, Poland has had this long-standing relationship with America. It's by far most pro-European, but also pro-American country, both pro-American and pro-European in the EU. My question is how should we look here at BRI? Because when you look Belt and Road Initiative, because when you look from a, say, geopolitical but more economic standpoint, it is one continent. It is BRI can, and building the right necessary infrastructure can speed exports to a big degree. Poland can become an infrastructure fund potentially within BRI, is a large exporting nation, but also in a very strategic location. So do you think this part of the world should become more active in terms of infrastructure investments, and is there a way, and I think you were talking about it, to sort of compromise and reconcile both positions?
I have an open mind towards BRI because I think that the world needs a huge amount of infrastructure. It makes a lot of economic sense to try to link in many different ways the Eurasian mass and so on. So I don't see necessarily everything with the BRI being evil, even if, of course, China may have also some geostrategic objective of having more trade, financial, infrastructural links that then lead to political influence on a number of countries. There is also the concern that some countries might be over-borrowing and end up in a debt trap, or choose white elephant projects that don't make economic sense, or the standards by which those loan made are important, and so on. But I would say that with the right condition, with making sure there is not over-indebtedness, no white elephants, no corruption, good labor and other standards, there's lots of projects may be good in many parts of the world, including in Central, Eastern, and Western Europe. I would like maybe the Europeans to take a cohesive, coherent approach together towards China, rather than China do a special deal with Italy or some countries in Central Europe. I know it's not easy, but Europe should have a figure out what are the aspects of BRI are good, what of them you have to worry about, be open about it, and then find a framework, and within that framework then individual countries say, I'll accept these Chinese projects because they make sense based on these criteria. So it's not black and it's not white. Unfortunately, I think that we might be going a process which is a free-for-all, and then the Chinese can do a little bit of the divided impera, offering better condition to one and carrots as a way of dividing others. And I'm not sure that's constructive.
Thank you very much. Coming back to Europe, because you also made a couple of points on where we are with the European economy. I have an impression, talking to the top representatives of global investors community, that we have a situation, and this is partially related to this rivalry between US and China, where America has a story for investors with growth, which is still okay, with tax cuts, maybe less predictable president, but still it's a story attracting investors, given technological changes in various industries, including energy. China has a clear story with a massive plan to spending on, particularly on advanced technologies, AI and similar, whereas in Europe, if you are a global private equity investor, you tend to struggle. And it's not only about the real growth numbers, but it's also about presenting the story. What does Europe have to offer in terms of AI investments, for example? I think it's a paradox that the countries that really try to present themselves as a good investors country is the UK, but as you know, they struggle for obvious reasons. Seems Poland is standing out here and achieves quite significant growth. Do you think, is there a way to overcome this obstacle in the short term? And given the result of elections, do you think are there any clear policy implications, or is it too early to say?
No, you're absolutely right in suggesting that in spite of all the political noises in the US has a potential compelling economic and investment story. China has its own form of state capitalism, compelling story, while in Europe, fragmentation of national sovereign countries, part of Europe, but without clear common policy on a whole bunch of things. I would suggest from a normative point of view, I'm not sure how likely it is, but certainly
take the financial sector. We know in Europe there is too many banks, too many weak banks, inefficient banks, and so on. In the US now, you have 5 or 6 key banks that dominate most of the banking system, whether it's, Citi, JP Morgan, Wells Fargo, Bank of America, and so on. You need consolidation of the European banking system and financial system. Whether that consolidation should be more cross-border or national consolidation, different views. Ideally, both of them are fine as long as you have consolidation that creates stronger, leaner, more productive banks that can invest into new technology. As we've discussed in the past, there'll be a revolution in financial services, combination of AI, big data, Internet of Things, revolutionizing payment system, credit allocation, insurance, asset management, even some of the capital market activities. And actually, if banks don't become nimble, of course, there is also the chances that the big tech firms, the GAFAs of the world, or the Alibaba, Tencent, Baidus, are going to become the true financial intermediaries, and the banks become just a sideshow. So there has been an awareness that we need more financial and better and more efficient intermediation to provide more capital to households, to small and medium enterprises, to startups, and also better allocation of capital for larger companies. This is key. We know financial intermediation, a good one, is good for innovation, economic activity. We need a true innovation policy. It doesn't mean throwing money right and left, everything, but for example, in this country and other, if there is not as much startup innovation as there should be, maybe tax incentives to R&D, and maybe subsidizing credit to risky projects, and there are ideas of providing guarantees. There's a whole spectrum of things one can think about. Some of these policies are national, some of them are European-wide. So, Europe is still, in terms of people, in terms of GDP, in terms of minds, in terms of science and technology, is an amazing place where there are lots of amazing things happening. Yeah, it's still behind in AI. But take 5G. US has lost pretty much any major 5G telecom firm because they sold some of them to the European. While in Europe, you have Nokia and Ericsson. So there may be a European 5G strategy that appeals to the US and doesn't imply to be fully, completely dependent on Huawei. These are a complicated thing. I've never given up on Europe. I believe in Europe. I grew up in Europe. It's an amazing continent that's brought peace and prosperity. The Central Eastern European countries, of course, middle income, they have much higher potential growth. Lots of stuff can happen. It's positive. You need vision, visionaries, leaders, and you have to have a coherent set of policies that makes Europe successful. We cannot give up in spite of China and US rising, and there is a way that makes this region successful, and your country shows with the right policy you can grow 4 or 5%, for example.
Thank you very much. Truly inspiring. I couldn't agree with you more on the banking sector. I think we have a situation in which the banking sector is undergoing through the deepest transformation since its founding by the Medici family in the Middle Ages. Yet you have JP Morgan with 15% ROE, able, because of the rates and also how well the US banks are run, able to invest billions in fourth industrial revolution technologies, whereas you have 40% of the banks in Europe not making up for the cost of capital. And consolidation, I think, more friendly approach of the regulators is likely the way to go. So we have a couple of very interesting questions, and I think we cannot avoid a question on cryptocurrencies, if we may. Don't you think each generation needs to go for its own fool's gold so that greed gets cyclically reduced? That's a very interesting question. I know you've been very critical of the blockchain technology, yet what I saw is a couple of implications, including in our sector with the whole idea of smart contracts and settlement. I think the recent history has shown it is a hype, but is it true that you do not see any merits in this new or relatively new technology. Can you please comment on that?
Yeah. First of all, as I pointed out, I'm all in favor of financial innovation and driven by technology that can really improve the provision of financial services in ways that are totally incredible and new. So I'm not in favor of keeping banking the Medici style. You're right in saying some of the practices and the paperwork of banks and the time it takes to do transaction and sending literally by hand pieces of paper is no better than what happened during the Renaissance in Florence. So we can do better, whether it's smart contracts or other things. I've pointed out that not just Bitcoin, but also other cryptocurrencies, they're not truly currencies, because something to be a currency has to be a unit of account, has to be a scalable means of payment, and has to be also a stable store of value against both wealth and purchasing power over goods. And nobody is pricing any goods in Bitcoin or any other cryptocurrencies. The technology of Bitcoin and proof of work does not allow Bitcoin to do more than 5 transactions per second. The Visa network can do 25,000 transactions per second. And it's not a stable store of value.
Sorry, I didn't want to interrupt. Tencent WeChat can do 300,000 per second.
Yeah, yeah. So there are others that can do even more. And it's not a stable store of value because its value can go up and down 10, 20% in an hour. So even if you're a merchant accepting Bitcoin, you cannot keep it, because unless you convert it back into euro or zloty, in an hour your entire profit margin can be wiped out. So calling them currencies is a misnomer because they don't have any of the 3 basic characteristics of a currency. I've pointed out that there is a revolution in financial services. It has nothing to do with crypto and mostly not even with blockchain. It's a combination of AI/machine learning, 2 big data, 3 sensors, Internet of Things, that is revolutionizing, as I said, payment system, credit, insurance, asset allocation. Take payment system. You know, in China, you have Alipay and WeChat Pay. Hundreds of transactions per second used by billions of people for billions of transactions a day. In India, you have this UPI-based system. In Kenya and Sub-Saharan Africa, you have M-Pesa. In US, you have Venmo, PayPal, and others. These are all technologies of digital payment system, digital money, that have zero to do with crypto, 0 to do so far with blockchain. And there is lots of financial innovation also in payment system occurs in Europe. I was told actually that Poland is ahead of all of the rest of the world in these contactless card. You know, for the last 2 days I was going everywhere using my US credit card to pay. So they take my credit card, they swipe it, nothing happens, and they tell them, no, sorry, it has a chip, so I have to put it inside, right? So in the US, we're still Stone Age. I mean, you in Poland, you're really way ahead of US for payment system. These are real innovations. I mean, crypto is a joke. So I'm all in favor of financial innovation. I'm all in favor of fintech. I'm all in favor of doing lots of amazing things using technology, AI, machine learning, big data, and you name it. I'm just skeptical about the crypto side of it. I mean, really, I think that's more of a gimmick. But
I think we still have a couple of minutes, and I think we cannot avoid a question on Poland and prospects for Poland entering the Eurozone. Advantages, disadvantages, yes, no, timing. Can you kindly offer your views on that?
Well, my view would be as follows. The lesson of the Eurozone, with countries like Greece, but others eventually getting in trouble, is that in order to join the Eurozone, a number of macroeconomic conditions have to be, achieved. You need macroeconomic stability with sound low budget deficits and low public debt. You have to have low inflation. You'll have to have high productivity growth so that you can compete without using the exchange rate with countries that have higher per capita income, higher productivity or productivity growth. Otherwise, you have economic divergence. You have to have a sound financial system. You have to be strong and flexible enough in terms of labor markets and goods market to be able to adjust relative prices, not using the exchange rate, but using changes in relative wages, relative prices, relative unit labor cost. And if all of those conditions are satisfied, and if the majority of the country then is in favor, because you also need popular support, some countries that are not member of the Eurozone now, but they're member of EU, may eventually decide that they want to join it. And I think there is a consensus, both within the Eurozone, but even here, that some countries like Poland are not yet there, and there is not a political consensus for it. You can do so many more things in terms of your macro framework, your structural reform, you're investing into innovation, in human capital, in the things that makes you come stronger, more competitive, more dynamic, and so on. And you do well with this currency that is not euro, but is quite stable. And if there is a shock that requires a movement of a currency, it can adjust smoothly. You have an independent monetary policy. It works fine for you. Do all the other things, and if and when a few years down the line, where there's 3, 5, 10 conditions are such that there is both the economic, financial, and also the political condition, you may decide to do that jump, or you may not decide. But I would say a country can succeed or can fail regardless of what's their currency regime. What important is more economic and other fundamentals, and doing the kind of economic reform that make you lean, efficient, productive, dynamic, giving opportunity, jobs, income for your own children and the young generation, and so on. Those are more important than the currency. Then at some point may become optimal to be part of a certain currency regime, or may not. That's of secondary importance. You cannot win prosperity by joining the euro. Italy is an example of that. And vice versa. You can be successful, like some of the Nordic countries, outside of the euro. So joining the Eurozone is neither a sufficient nor a necessary condition for long-term economic success.
Thank you very much, very wise. I understand the short answer is no rush and focusing on reforming the economy. Let me do last two questions. There's a question signed by Mr. Andrzej Maciejewski. And the question is on short-termism of politicians. But if we can dwell upon that and maybe also talk about short-termism of investors, and how the fact that you have a lot of corporate world actually run by people like myself who have to report on quarterly basis to their shareholders, which makes it difficult in some cases, first of all, to have a long-term strategic vision, but also to allocate necessary resources for projects of longer duration. So focusing first on democracy and short-termism versus long-term strategic perspectives, if you can maybe provide some of the best examples from the world that you see in terms of leaders being able to think long-term, but also from investors' perspective. And then I have a last final question, and we wrap up.
I still am a firm believer in democracy and liberal democracy. I think it was Churchill that said that, that democracy is the worst political system apart from the alternatives. And history over and over suggests that authoritarianism of the extreme right and or of extreme left eventually leads to economic and political disaster. And even China, that appears to be a successful example of technocratic authoritarianism, is beset with lots of problems that are going to be emerging over the next few years. And democracy in the West has led not just to prosperity in the last 70 years, has also led to peace. And democracies do not fight wars. And we know even in Europe, wars were fought for a long time. So I think that democracy is still the best guardian for peace and prosperity. Of course, democracy has to deliver the goods for people. If it doesn't deliver, people are going to go for authoritarian chimeras of one sort or another. But I do believe that we need leaders that have a long-term view. It's hard, but I think that Europe, for example, is a stage where literally either you choose leaders nationally and otherwise we're going to think about the long term, or otherwise the economic damage is going to be severe. I think there are also ways in which the corporate sector and the financial system is moving in the direction of more long-term things. There are long-term versions of funding for firms that are not in public markets, like startups and VCs. There's a huge need for infrastructure spending around the world, and there are now investors like long-term pension funds, insurance companies, who are actually looking for returns that are positive and not near zero, like on bonds, that give you a stable return over the long term. So there are ways to fix this short-termism, but we're in a world of disruptions, ecological disruption, political disruptions, of course, technological disruptions. So if you're a firm and you don't realize that your entire business model, say a bank or corporation, can be completely disrupted by a technology firm that enters in your space, if you take that short-term view, you'll disappear in a matter of years. So you don't have anymore the luxury of looking just for the quarter. Either you look a long term and say, how as a bank I face the challenge of fintech and of GAFA, or otherwise you're going to disappear. So you have no choice but take that long-term view. And financial institutions like yourselves and others are taking that long-term view, because the other option is to die or to disappear gradually over time.
Yes, I mean, we reconcile, we as a bank, we take a long-term view, yet quarter by quarter we show very good results. So we are able to reconcile that. So the last final question, how many Twitter followers do you have?
I think I have about 460,000 or so. I think among economists only Paul Krugman has more than I do, but he has a column in the New York Times. But, but sometimes Twitter, as we know, like other family of social media, can be a bit toxic in the level of discussion. Things are not always civilized. I don't know Instagram because I'm a man of idea. So people say a picture can say more than 1,000 words, but I can only bring ideas to the debate. Whether people agree or not, at least I provide some food for thought.
So after 48 hours of being here in Sopot, any ideas, like your impressions and ideas for your tweet? Or we will see your tweet maybe before you tell us what the tweet is.
You know, I relaxed and I come to a country and want to learn, and I met some amazing people and so on. I did a tweet on Gdansk and pointing out how this is where on June 4th in 1989 was the beginning of return to democracy, not just for Poland, but for the entire Eastern and Central Europe. That was a positive thing that changed the world for the better for many parts of the world. So, you know, I think I feel actually touched, not just to be into this amazing conference, but actually to be in Gdansk at this very historical moment. And I know there is lots of events, celebration occurring this weekend and next few days. I'll go back to New York tomorrow. But this is a part of the world where lots of great historical things have happened. And what has happened in the last 30 years has been historically, radically shift for the better for your country and for this part of the world. So we have to thank the Poles for leading the way in that direction. And you can still lead the way for both Europe and the world in terms of good changes economically and socially. So I'm hopeful that's going to be the case.
Thank you very much, ladies and gentlemen.